We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Chris Grove, President and CEO of Commerce Resources. How are you today, Chris?
Yeah, just great, Tom. Good to talk to you again. Thank you.
Good to have you back. And of course, you and I talk all about rare earth elements, that particular market, what's happening in there. So why don't you give us a little bit of a rundown of the price action in the rare earth element space? Because this is obviously so pertinent to today's technology, whether that be computer chips, magnets, electric motors, any of that stuff. And that'll give us kind of a backdrop to base today's discussion around.
Sounds great. The most recent significant price movement really started just about a year and a bit ago. Like 16 months ago, and that's when prices started to drop, and prices fell for about a year. So from about April of 2022 to the end of April 2023, prices dropped by about 50%. Now, the thing is that prices started appreciating in May, and then they fell off a little bit in June, and now they're appreciating again. There was an argument suggested by people in the West that this price movement was again an example of Chinese market manipulation. Now, one of the contrary aspects about the prices falling for a year was the suggestion that demand for rare earth elements was not falling, and certainly there wasn't any increase in supply to usually tip the scales in terms of oversupply, over that of current demand. It wasn't that. And so generally speaking, for the last decade, if not much longer, global demand has continued to increase. There may be periods, like maybe actually in the last year, where demand has slackened a little bit, but generally global demand just continues to increase. And I think you can see this, and your listeners can see this, in potentially the number of new electric vehicles on the road, Teslas, Volts, whatever, the number of wind turbines being built. There are some different aspects that are rare earth element dependent that are less visible, like HVAC systems. But considering, aspects of a warmer climate, and everybody buying, air conditioners, certainly here in Vancouver and in British Columbia, very few homes historically had air conditioning. But my wife and I bought 2 air conditioners, Penguino by, I forget the name of the, DeLonghi, recently. That wasn't a pitch, promote for DeLonghi there, but they're like $500 each. But essentially, what drives the fan in your air conditioner are rare earth element permanent magnets. So there's a whole bunch of, I think, fairly obvious and maybe not so obvious designs that have increased demand globally for rare earth elements. Now, the price movement moving against that in the last year thereabouts, it was suggested that this was Chinese market manipulation. And sure, some people might say, again, Chinese market manipulation, so that China, who is the world's largest market for rare earth elements, so that they could potentially make it more challenging for projects outside of their sphere of control, so that then China could potentially buy these projects essentially on the cheap. Now, there are examples of that being basically true. I mean, that China has taken control of rare earth element projects in different countries. Certainly not North America, but certainly in Africa and other countries, this has basically happened. Whether or not that supports this suggestion that it is Chinese market manipulation, I can't be definitive about that, but that has been the suggestion.
the last time we spoke, we talked about China's dominance within the rare earth element market. So some stats I found are that they account for 70% of world mine production and 85% of the processing capacity. So can we talk a little bit about how they got into such a dominant position within that market?
Sure. And that number on primary production might be a little high. It might be historically accurate, say, 5 or 10 years ago. But China still is the largest producer of rare earth element feedstock for sure. But in the last 10 years or so, Beijing has attempted, and I think been actually somewhat successful, in shutting down illegal and overly polluting mining projects in China. Now, part of that is that one of the most egregious polluting extractive methods is essentially acid leaching on site. And that was the norm for the South China ionic clays. That basically doesn't happen at all. Those projects were all shut down, but China has increased their outsourcing of that material across what is a negligible border in northern Myanmar. So that most environmentally damaging production, certainly Beijing can say to its own people, well, we're not allowing that in China anymore. Whereas the amount of that kind of production, the heap leaching with acid, is going gangbusters in northern Myanmar. Now, having said that, to answer your question about China's dominance, one of the really smart guys in the rare earth element sector is one of the principals at the Saskatchewan Research Council, and his name is Jack Zhang. And I've known Jack for a few years. And he said that Beijing put something like 1,000 people on rare earth elements way back in the 1980s to basically figure out how to become globally dominant in rare earth elements, partly potentially because of a very often quoted line from Deng Xiaoping, which was Saudi Arabia has oil, China has rare earth elements. And that is fundamentally true. China does have some very good rare earth element deposits, and still the world's largest producer, which is Bayan Obo in Baotao, China, which may produce 45% of the entire world's supply from that one mine. And, that is we believe, a carbonatite dominant monazite, a rare earth element deposit. At any rate, China worked very hard and spent, billions of renminbi in essentially achieving global dominance. One of the principles at the only rare earth element producer, or the most significant rare earth element producer in North America, which is historically Mountain Pass, historically owned by Molycorp. And Molycorp's head geologist said to me one time when they were hosting a site visit, and I said, should I come down and visit that? And he said, no, you're not going to really see anything. He said, we did let the Chinese in the 1990s, and look where that got us. And at that point in time, the United States was dominant in the rare earth element sector. And this gentleman who passed away in the last couple of years, really sweet guy named John Landreth, he was the head geologist for Molycorp and the precursor, which I believe was called Unocal. Anyways, John said, they were so kind of proud of the operations at Molycorp, which had been in operation since the mid-1960s. They would say, yeah, hey, come on in, take as many pictures as you want to the Chinese. And then the Chinese went back to China and figured out how to pour an insane amount of government capital into optimizing their own operations. And then they dominated the global supply. And arguably, whether or not they were making a profit, they were one of the reasons that Molycorp had to shut down in 2002. So it was very much a political agenda by Beijing that goes back, 40 years, 50 years.
Mm-hmm. So, from that perspective, now I'd like to move into the Senkaku boat incident as an example of them withholding metals, these critical rare earth elements, to other countries like Japan?
Yeah, sure. So before we get into the Senkaku boat incident, let me just mention that there was really no perception of an opportunity to be a rare earth element producer outside of China up until from the years 2002 to 2005, because the Chinese had dominated the market. However, in 2005, kind of like June 2005, the China imposed an export duty on rare earth elements, which was later in 2012 deemed illegal by the WTO. It only took the WTO 7 years to declare it illegal. Way to go, WTO. Bottom line is that China basically created the reasoning for all of these manufacturers to then set up facilities inside China to access the cheaper priced domestic feedstock. And basically everybody and their dog did that, including the world's largest rare earth element processor that is not controlled by the Chinese, which is the Belgian chemical company Solvay. Solvay owned the world's first rare earth element processing facility, which was set up in 1948 at the port of La Rochelle on the west coast of France, where so many German U-boats used to be docked 3 years earlier in 1945. And in 1948, Ron Poulenc set up the world's first rare earth element processing facility. I toured that facility in 2014. It is a very impressive facility. At any rate, Solvay in 2005 set up 2 processing facilities inside China to access the cheaper priced domestic feedstock. Now, jump ahead, but that basically created the opportunity for the first time for there to be an alternate source of rare earth elements outside of China. And so that's when really the rare earth element activity in the West started in the summer of 2005. Jump ahead 5 years. Now it's September 2010, and that drunken Chinese fishing boat captain was approached by Japanese Coast Guards, and the Chinese fishing boat captain rammed 2 Japanese Coast Guard cutters. And so they arrested him. And in retaliation, China cut off all supply to the world's second largest rare earth element market, but the world's largest magnet manufacturer, which is Japan. Mm-hmm. So arguably, was China really worried about one Chinese citizen getting arrested, for fishing in Japanese waters? Maybe, maybe not. But the bottom line is that Hitachi, the owner of the world's dominant magnet recipe, Hitachi had already set up facilities in China. But when China cut off all rare earth element supply to Japan, basically that was another significant step in China attaining dominance in the magnet manufacturing world. Mm-hmm. And so sometime after 2010, 2011, China became the world's dominant rare earth element magnet manufacturer. No surprise. And so the Japanese have been playing catch-up ball to that situation since 2010, 2011. So ultimately, price movement in recent history, whether that's Chinese market manipulation. I mean, as I say, there are people who are very smart in the West who have suggested that this is just another example of that. The reasoning behind it is maybe an assumption, a guess, et cetera, but that's currently what we're hearing.
Well, when you go back to incentives, as we always try to do on the show, that, seems to make sense if they're trying to assert their dominance within that market. But, Chris, that really brings us to today and another situation that we find ourselves in. And actually something that was related, but another reason I wanted to have you back on the show, which is this story that came out about them withholding gallium and germanium from the US. So walk us through why that is, what that restriction is, and maybe start with what those 2 metals are critical in manufacturing.
Yeah, sure. So this appears by most analysts to be a little bit of tit for tat in the microchip marketplace. And arguably, this stems from the United States and maybe Canada as well, but primarily the United States supports public support of Taiwan. The world's largest chip manufacturers are in Taiwan, and China withholding supplies of germanium and gallium. Those are both specifically used in the manufacture of chips, or most importantly, in chips. They are not rare earth elements, and so our deposit doesn't have germanium and gallium, and they're typically produced as a byproduct from other primary products. Now, as I say, this seems to be a little bit of tit for tat for political support towards Taiwan. There was an additional suggestion that maybe rare earth elements would be next on the chopping block. I'm not sure if that is a realistic guess or assumption on the part of Western analysts or not. But China has threatened to withhold shipments of rare earth elements. Previously, when there was the saber rattling between Beijing and Donald Trump in May, June of 2019, and it never really did happen. But it's certainly something to keep an eye on, just to see which way the wind blows. I mean, if China does withhold, I have no evidence to suggest that they are currently withholding germanium and gallium, or that they have started withholding amounts of rare earth elements. But it will be interesting to follow that for sure.
Mm-hmm. So, does this whole situation that we've discussed here, with one would think that demand would be high considering all the electronic necessities of all this stuff, does that pricing theme go contrary to the market demands, showing us that it's not always about demand setting the price?
I think I would say yes. I mean, I think in certain commodities, you can't read everything from just the price movement. In terms of rare earth elements, as I said earlier, global demand has basically just increased year after year, at least for the last 15 years, let us say. And the thing is that after the Senkaku boat incident, rare earth element prices went up from 1,000% to 3,000% in a matter of months. Mm-hmm. So, dysprosium oxide, which is currently at about $300 a kilo, in September of 2010, it was at about $90 or $100 a kilo. By March or April of 2011, it was at $3,000 a kilo. So then what happened? I mean, that price was essentially unsustainable. So then the dysprosium oxide price and other rare earth element prices fell for about 5 years, while demand was continuing to increase on a global scale. And the rare earth element prices really only started appreciating generally kind of in June of 2017. And the suggestion I would make is that after about 5 years of falling prices, the global rare earth element or the global magnet manufacturers had generally agreed that there were no substances to manufacture a superior magnet over rare earth elements. So there was about a 5-year period, maybe 6-year period of global R&D to find substitutes for rare earth element permanent magnets, and no substitute and no viable substitute was ever found. And so it was only after essentially the cessation of that R&D that rare earth element prices started to move up, and move up very quickly. They did. So rare earth element prices from like 2017 to 2022 doubled. However, as I said earlier, prices fell by about half from 2022 to 2023. Mm-hmm. And so it was a bit of a head scratcher. And, the assumption is that this is Chinese market manipulation to be able to buy projects on the cheap in other regions of the world. So,
Chris, has their dominance in the world been falling since, the rest of the world kind of sees the control that they have over this market, or because they control the processing capacity, does that become their main mechanism of control over the market?
Yes, the Chinese are still very much in control. So, for an example, China became a net importer. It was reported in the fall of 2018. So China can't produce internally, domestically, enough rare earth element feedstock for their gargantuan downstream processing industry. They have the world's largest demand for rare earth elements. They are the dominant processor. So the company Mountain Pass, the only rare earth element miner in North America, that is the destination of their product. It goes to China right now, and that is about 40 to 50,000 tons of rare earth element concentrate that goes from California to China every year. So China still is in that dominant position. They're the dominant magnet manufacturer. They would be arguably the dominant, manufacturer of designs that are rare earth element dependent. So once you've separated out the rare earth elements, then you can make different products from them. But the most valuable would be the rare earth element magnets, which then go into every electric motor known to man, basically. And so, yes, China still is in that dominant position. It has been a long time. I mean, it's 18 years since that export duty was imposed by China in 2005, and still there is no separated oxide production of rare earth elements in North America. So that is something that is certainly being looked at by several groups right now. And ideally, that will come into commercial operation, in the near future.
Mm-hmm. So, you bring up that point that they're now a net importer. And I wanted to talk about some of the other elements that they need. For example, you sent me a story that they need heavy monazite mineral sand. So what do they need that for?
Well, monazite is the most attractive rare earth element bearing mineral out of like 150 different minerals that can hold amounts of rare earth elements. Mm-hmm. This brings us into an area that is unusual for really any other commodity, really excepting for maybe nickel. So, Voisey's Bay, Raglan, they're massive sulfides. They're not laterites. A laterite hosted nickel deposit can typically only be economic if it's in a third world country with much lower labor costs. So if you're in the West, like in North America, you want a massive sulfide. Now, the issues with rare earth elements are that they can be found in over 150 different minerals, but monazite has the highest percentage always of what is most valuable in that family of 15 to 17 commodities, which is the rare earth element family. Mm-hmm. Of that family, there are 4 that dominate in the marketplace and in value, and they are the 4 that are used in magnet manufacturing. And as I may have referenced already, terbium is one of them, and it's the most valuable currently at about $1 million a ton. You don't need a lot of terbium to make your rock worth a lot of money. Mm-hmm. Now, in terms of the current situation with magnet manufacturing being dominated by China, Tom, I've now forgotten your question. Can you ask me your question again?
I just wanted to go through, that they're now a net importer and this monazite, what it is being used for. But it's basically like, as I understand it, almost like an ore feedstock to be able to separate all these other elements out of, right?
Yeah, sorry. So the mineral sands, they're often called heavy mineral sands, but the dominant mineral is monazite. Okay. So they can be called monazite sands or heavy mineral sands or heavy monazite mineral sands, but they are dominated by the rare earth element bearing mineral, monazite. And so these heavy mineral sands have more of the four rare earth elements used in magnet manufacturing. Now, one of the interesting things that we have learned in the last couple of years is that the monazite sand value has gone up by somewhere from 500 to 1,000% in the last 5 years. Mm-hmm. And it's because China especially is a huge importer of these monazite sands. And apparently it has also been suggested that China doesn't have control over that price because it's being produced in other countries like Brazil. And so that is an interesting kind of different aspect to the story right now. But the mineral sands or any rare earth element deposit always has some kind of a radioactive signature, which then impacts where it can be processed and where it can be shipped to. China is basically by far the world's largest destination for these mineral sands, which are generally radioactive in some regard. And so, but China has no protocols in place to block that importation of these heavy mineral sands, as maybe some other countries do.
Mm-hmm. So, considering this, let's say, lack of competition within the space, Chris, has there been an issue in the rare earth juniors basically overpromising what they can provide as a way to try to capitalize on being a source outside of China?
Well, that's a tough question to answer, except to say that there are, only a few deposits that have the standard fundamentals that typically would give you positive economics. So overpromising, there are certain specific examples of companies that have, in the last couple of months, let's say, corrected their public disclosure. And these companies have suffered in the market from this corrected disclosure. There's a lot of comments about mineral exploration in general, potentially, over promoting aspects. And so, that certainly could be true in all commodities, but certainly in rare earth elements as well.
Mm-hmm. Chris, have you seen any trends developing in what materials are in demand from battery manufacturers? This seems like one of the biggest parts of the market, and I'd like to get a sense of how these chemistries and material demands have changed over time.
Well, thank you, Tom, because that is also a pet project, or maybe that's the wrong term, but that is also
a pet interest, maybe.
A pet interest, there you go, of ours, because we have been very interested to watch the continued developments of a design that was first spoken about and advanced by Toshiba in a tri-party joint venture between Toshiba, Sojitz, and the world's largest niobium producer, which is the Brazilian company, Companhia Brasileira do Metalurgia Mineração, or CBMM. And the three companies basically financed the production and what is now the commercial application of what is a titanium niobium heavy lithium ion battery. So it's essentially an optimization of a lithium ion battery that incorporates more titanium and niobium oxide. And the vice president of CBMM said about 2 years ago that if and when this design becomes commercial, potentially the niobium oxide market could go from approximately 100 tons per annum up to maybe 45,000 tons per annum by 2030. Now, that is an incredible projection. But the battery is in commercial production right now. And the most attractive aspect about it is that it can be recharged completely in less than 6 minutes. Now, if you look at niobium, generally speaking, the world's niobium market is dominated by demand for ferroniobium, which is used in pipelines, structural steel, bridges, buildings, et cetera, et cetera. And very little of the market was for niobium oxide. So almost basically everybody who's producing niobium is producing ferroniobium. And so one of the things that we were always focused on producing at our project here in British Columbia at Blue River is niobium oxide. And it's mainly because that deposit is a tantalum niobium co-product situation. And to get the best value for both commodities, we would separate them into oxides. So we're very excited to watch this increase in global niobium oxide demand.
Chris, one of the exciting parts, I think, of running a company like this is the advent of new technologies, specifically as you just kind of highlighted in that Blue River project. So walk us through, a new change that has, let's say, streamlined and make the process of extraction a little bit more efficient. And that was, you shared with me the Kruppen process. So walk us through that change of, let's say, comparing it to the previous separation method.
Sure, absolutely. So standard separation in rare earth elements as well, and in tantalum and niobium is called solvent extraction. So if you've seen any movie with where somebody got whacked and then they've got to dispose of the sadly departed, like in a bathtub, and they pour acid on it. I know that's a disturbing image. I'm sorry, I apologize. But that acid is hydrofluoric acid. And hydrofluoric acid, or HF, is the world's most expensive and the world's most caustic acid. And it is a standard in the solvent extraction of different mineral ores. So very specifically, you would take a rare earth element concentrate or a tantalum and niobium concentrate, and you would dissolve it completely in hydrofluoric acid. And then you would introduce a reagent like kerosene, for example, and then the actual solids you're looking for, and this is all very well thought out and controlled, et cetera, et cetera. But then the solids you're looking for, your primary targets, tantalum, niobium, they would essentially fall out of solution. Mm-hmm. But solvent exchange or solution, that is the standard in rare earth element processing and tantalum and niobium processing. The thing is that the Kruppen process is able to achieve good separation, specifically in tantalum and niobium, through the use of a much cheaper version of fluorspar, which is ammonium fluorite, but which is cheap and is also not inherently dangerous. And so the separation process then, or SX, is achieved through the use of a cheaper, less dangerous chemical product, ammonium fluorite. And the separation is apparently very, very good. This essentially was verified by our chairman of the board, Dr. Axel Hoppe, whose doctorate is in chemistry, and he is also the man that ran the world's largest tantalum processor, the German company HC Stark, for several decades. And so he visited Alexander Kruppen at his facility in Tallinn, Estonia, back in 2018, and Axel says the process works. So it's not only cheaper, but it also would have a lower threshold of environmental impact for the environmental and social impact assessment certificate, which of course in Canada would always be required before we were able to, put that kind of operation into commercial production.
Interesting, Chris. So is that something that has, come about very recently?
Well, it's an interesting story, Tom. And actually, we were approached by the financial backers of the Kruppen technology back in 2006. And that was an Estonian financier who unfortunately was killed in some tragic accident on the docks in Tallinn at some point in time. So we've actually known about the process since 2006. And we only had shipped material to the Kruppen facility in early 2018. There were periods when, and let me be very clear, we, with a new technology, as much as we were interested in the potential for it, due to the very heavy regulatory burden, essentially everyone in Canada carries, we would have been required to essentially construct a pilot plant operation of this process to confirm its economic viability. And we decided to go a different direction between the years 2006 and 2011. So the Kruppen process is not included in the economics that were produced in 2011 on our Blue River project. So it was only after that point that many years later, we decided to look at this again. But we've known about the process since like 2006, thereabouts.
Interesting. Well, Chris, that's pretty much all I have to ask you for today. Is there anything else that you'd like to touch on that we didn't yet?
Well, one of the interesting points I have to say, Tom, was that in the last decade, we've more than doubled the drill data on the ashram. So one of the things that we feel might be good for people to see is a mineral resource update on the ashram. Considering that the bulk of that deposit is in the lowest resource category, the inferred category. So the current resource for the ashram is 220 million tons in the inferred category, 28 million tons in the indicated category, and only 1.6 million tons in the measured category. But that was based on 15,000 meters of drilling done up until 2012. And since that time, we've added more than 15,000 meters. And the great majority of that second 15,000 meters is in infill drilling. So we believe that we have satisfied the requirements of the next economic report by producing a resource that would have all of the production for the first 25 years in the measured and indicated category. So I think that might be positive for us to have that out. And so we will be potentially looking at doing that and getting that out in the next couple of months.
Great. Lots of stuff to keep an eye on here, Chris.
Absolutely.
And of course, through the industry as well. And I appreciate you taking the time today to share all your knowledge of that with us.
My pleasure, Tom. Always a pleasure. Thank you again for your time today.
Thank you. And of course, anything more from Chris is available at commerceresources.com, right?
Yeah. Thank you.
Perfect. Thanks for your time today, Chris.
My pleasure.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.